Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about the calm before the storm. And we're on the pound yen daily chart here, and I've also got an hourly look here that we're going to look at. What do I mean by that? I mean, you had this huge run up here, and then the calm starts being, is when the pair just kind of trades back and forth, consolidates tighter, 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 tighter. And so it forms this triangle pattern. And rarely will a triangle fully complete, meaning get out here to this very tip, but it'll usually complete about as far somewhere in where it is right now. So that tells me that within the upcoming hours to day or two, and more likely in the upcoming hours or so, this pair will likely break out and head north or south. Now, since it came into it from an uptrend and started moving like this, it's more likely that this uptrend move will continue on. So if it comes into a triangle from coming upward, consolidates, it'll normally break out heading upward. Had it come from a downtrend and consolidate, then it's more statistically probability that it would go downward. So since this came upward, we're looking typically for an upward break. However, if it defied the statistics and broke downward, I wouldn't have a problem with shorting either. And here's an hourly look, and you can see in the latest number of hours, man, I mean this pair just got really tight. Consolidation is very unusual for pound yen. It is normally very volatile, so when the hourlies just coil up like this, when you see the dailies just getting shorter and shorter and shorter, a huge breakout is coming. So I call it the calm before the storm, because it looks like everything is tame, lame, boring, just dead in the water, and before you know it, boom, you see these big moves that'll come out one way or the other. So that's the calm before the storm. I like these triangle patterns because they get you ready for the trade to come. The trade to come is going to be a volatile move. It's going to be a directional move. It's going to usually pop out and then come back some and then make a big launch, or pop out this way, come back some, and then make a big launch down. That's typically how these pairs do this. Initial price targets would be towards the top of the triangle or the bottom of the triangle as this breaks out. But initially, you'll usually go the width of this triangle, at least from the point of breakout upward, or from the point of breakout downward. So get ready for a breakout coming soon in the pound yen. This could happen as soon as the Bank of England minutes come out. That comes out at 4:30 in the morning. So you may be seeing this a little bit after the fact from when I'm filming it, but that's okay. The principle still holds the same. You can look for these tight coiling events, and when there's usually some type of catalyst that will make it spring out. Because what is this? This is coiling indecision. The bulls and the bears are tugging back and forth, back and forth, back and forth. Nobody's winning the tug of war. However, ultimately, just like the end of any real tug of war, finally one side gives out and gets yanked to the other side, just like in a tug of war battle. It's exactly what happens with the traders in the currency pairs. Eventually, one side of it wins, either the bull side heading upward or the bear side heading downward. So the BOE minutes that come out at 4:30, the Bank of England interest rate minutes that showed how they voted previously and some of their voting and thoughts on that interest rate decision, could very well influence the way this goes. If it's not that event, it could be anything else. A huge stock market run up or a huge stock market sell off overnight, anything like that, today or the next day or two could actually break this out, and more than likely will break it out in a fairly strong manner. So I like to say low volatility begets high volatility. So here's another example that was back here. There was a little bit of a triangulation here, wasn't quite as obvious, but lower volatility, boom, begets high volatility. Large daily candle up, hundreds of pips, 300, 400, 500 pips here, boom, and continues on up. By the way, when moves launch forward like that very heavily, I would not be a person that would go in there and short, saying, well, it's got to come back because it's gone too far. That does not have to happen. goes up here, keeps going. Matter of fact, even when it looks like it's petering out here with 2 dojis, what does it do? It still launches forward and so forth. So I would, anytime you get this huge conviction, this huge buy, huge launch forward, I would not be quick to short that move. Same will happen here. When these moves break out and head north or south in a very distinctive manner, do not be quick to make a counter trade. Go with the trend, go with the trade, especially if the break is to the upside, because that's the higher probability break in the first place. And we go over a lot of these types of patterns in my currency trading service, which is the Currency Cross Trader. We take a lot of live trades on these type patterns here. And triangle is one of my favorites. So in the service, we give exact entries, exact stops, exact limits, things of that sort. So check that out when you get a chance. Thanks so much for watching us. Bye bye.